Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. Welcome to episode 39. I can't believe we're already at episode 40 next month in my monthly series where I'll give you a quick update on the overall stock market in the past month, and I'll cover both the Canadian and US stock market, of course, and we'll review some of the most popular high-yield income-oriented funds on both markets. So a lot of covered call ETFs, really funds that use income enhancing strategies. Of course, we'll see how they're doing, see if there's any updates or any news on any of them, and of course, as usual, I will tell you which sectors I feel are currently undervalued and good buying opportunities. So if you're new to the channel, welcome. My name is Adrian. The primary objective of my income oriented investment strategy is really to generate relatively safe and consistent passive income forever. And one important aspect of my strategy is that you invest consistently over time. If you do, you will probably capture what is undervalued in the market, capture the average of the market, and of course dollar cost average, and increase your income every single month. Remember, I am not against the more mainstream ways of investing, the growth style or total return style, or even the dividend style of investing. I think those strategies work really well long-term as well, but those are really for investors who are prioritizing total return, whereas my style prioritizes more the income or the cash flow. So let's check out what's going on with the markets, everyone. Before we continue, I'd just like to take a quick moment to thank the sponsor of today's video. It's PASSIV. So PASSIV is the portfolio management tool that I personally use. It's great to organize your portfolio. And in case you missed it, Sunday's video, I released a video all about PASSIV and the details of all the features. So make sure to check out that video if you're interested. By the way, there's a free version, so you could try it out for free. The Elite membership, which gives you additional features, I talk all about it in Sunday's video, is only $99 a year, but it's free if you use Questrade like me. And if you want to try it out, I have a 50% off referral link in the video description below. So make sure to check out PASSIV, because if you're Canadian and you use TD, RBC, and BMO, they're going to be integrating PASSIV very soon in 2023. Very exciting. So you could download it now for free. And soon, if you use TD, RBC, or BMO, or even Vanguard or Schwab, if you're in America, or E-Trade, you'll be able to use PASSIV. So make sure to check it out. When it comes to the overall stock market, we'll start with the Canadian one first. So I'm looking at the past 1 month here, and I am filming this on June the 2nd, which is a huge green bull day. Everything is up. But in the last month, the Canadian market is really the one that's been lagging. You see here in the last 30 days, the last month, it's down just under 2%. And that makes sense because it's really the financials, the energy sectors that are really been put under pressure. But on the American side, look at this. The American stock market has been doing great in the past 30 days, everyone. S&P 500 up almost 5% in the last month. But the real winner has been the NASDAQ, has been the tech stocks. They have all shot up. And the NASDAQ, an incredible, almost 11% up in a month, the last month. Absolutely incredible. The Dow Jones, which is more the index that tracks value stocks, it's only up or basically broken even. So that just shows you that the big winner is really the technology sector, and the sectors that are really lagging is pretty much the ones that are heavy in the Canadian side, financials and energy. But US banks are not doing that well either. And even the volatility is down a lot. In the past month, you see that it's at under 15. It's a while I haven't seen the VIX under 15. In case you didn't know, the VIX is a good way to measure how volatile the market is. And look at that, it's down 20% in the last month, which unfortunately means the call option premiums for us income investors are not as rich, and we'll see the effect on some of the distributions, especially on the American funds, in a moment. First, let's check out the overall Canadian landscape when it comes to the income-oriented funds right now. All right, everyone, on the Canadian side, of course, we're going to start with the all-in-ones, the diversified all-in-ones, which are some of my favorite funds. So HYLD, HDIV first. So HYLD, nothing much to report. They declared another 12-cent distribution. They did recently reduce it, actually for the reasons I just discussed about the VIX, because when it comes to HYLD, don't forget you have JETQ, JEPI, XYLD, QYLD, RYLD, a big chunk, more than 50%, are covered call funds that have varying distributions. So if those distributions are reduced, well, then HYLD has to reduce its distribution. It's only normal. And we'll see how some of those funds, of course, the newest distributions, unfortunately, are even a bit lower now because the VIX is down. HDIV, which follows more the Canadian market, no news on this one either. Nothing big, nothing major here. Still having 13.5 cent distributions. Big news when it comes to the all-in-ones is HDIV. So HDIV is Harvest's all-in-one solution, and what they did, the big change here, it's not a dividend increase or decrease, but they added the TRVI ETF in here. So TRVI is their latest covered call ETF on travel stocks. I'm really happy they did this. This ETF on its own, TRVI, has over 10% yield because the 30 companies in there, travel and leisure companies, are very volatile. But they did make it a smaller position. You see here at 9.7. Of course, if you add all these up, it should come out to 125 because of the leverage. But you see that it is a smaller position. And I kind of agree with that because it is a bit more niche. So I do like the fact that they added it, and I also like the fact that it's a smaller position compared to the other one. So that is some really good news for HDIV. Added diversification is always welcome. BMAX, no news on this. Stay tuned for an update video on BMAX where I interview Chris Cullen with the epic mustache, of course. We'll talk about BMAX and I'll give you my take on it. This one, no changes whatsoever, just been rolling, and they declared already their 10 cents a month distribution, so it's still 10 cents a month. EIT now, EIT of course not an ETF, it's a closed-end fund. It's actually very rare and the first time I see that the NAV is lower than the stock price. So EIT for some reason always trades at a discount, but I guess not anymore. Right now, the day that I'm filming this, maybe this could change obviously tomorrow or a couple of days after you see this, but right now it's actually trading at a small premium, which is pretty rare. So EIT been put a little bit under pressure, but holding really strong, because don't forget EIT has no tech stocks and is very heavy on what sectors? Energy and financial. So a little bit of pressure on EIT, but personally I really wouldn't consider it unless it has at least 10% yield, which means to have 10% yield or more, it has to go under or be at $12. Now let's take a look at some split share funds. So real estate, also another sector under pressure, and of course we have the RS split share fund trading at a big premium, but you're getting almost 11% yield with this. I still think RS is a good buy right now. ENS is trading at a very, very big premium. When it comes to the Brompton split share funds, this is why I always try to film this video on Friday, guys, because Brompton always updates their split shares every single Friday. So DGS unfortunately is not going to be paying a dividend out in June because it's under $15 unit NAV. A lot of people have been asking me, do you think it's a good buy? I would say probably yes, because DGS, don't forget, is all Canada, and Canada's been put under pressure, but it is still trading at a premium. Right, you got to buy it at 520 when it's really worth 445, but the premium it's not so bad. I think it's at like 17% premium or something like that. But don't forget, you got to expect to miss dividends with DGS, a bit of more of a higher risk one. What's interesting, or the one that's really capturing my attention, is GDV. So it's very, very rare. I haven't seen GDV under $10 for a really long time. Now it's at this is obviously yesterday's June 1st stock price. It's up today, 948. So GDV is over 12% yield now, guys. It's still trading at about a 20% premium, but I think now might actually be a good time to pick up some GDV, because don't forget, GDV is extremely well diversified sector and regionally diversified. You guys know it's one of my favorite split share funds because of that. For everything else, nothing really stands out to me. Yes, SBC, LBS, financials have been put under pressure, so the yields are really nice, but always make sure to check what the premium or discount is before you invest. Unfortunately, as usual, guys, Quadravest does not update their stuff very often. It's June the 2nd. They still didn't update it, so I can't really say if any split share funds stand out to me, but keep an eye on DFN, because I have a feeling that when the next update comes out, it might actually be under $15 unit NAV or close to $15 unit NAV. So keep your eye on DFN, because they might not pay out in July. But today was a great day where everything went up, so maybe it'll mitigate that. FTN can't see it. It's not updated, so keep your eye on those. Bitcoin and Ether, the good news is that it's doing fairly well, fairly stable. I would say it's a good time to get into it. You're getting over 12% yield on both of them, and especially BTCY, they almost redoubled their distribution. They've been going down a lot lately, but now it's back at 4 cents a month, which is really, really nice. So that's a welcome thing. And even Ether, they increased it back. Not as hard as BTCY. It went from 2.1 cents to 3.15 cents, so a nice increase, and hopefully it stays at this level, or it actually, sorry about that, or it increases rather. But yeah, definitely some welcome news. So what are the sectors that are undervalued? Like I mentioned at the beginning, financials, especially US banks. If you're looking for Canadian banks, I think one of the best ones is really HMAX. There's a million Canadian financials income-oriented funds. There's a bunch of split funds. There's regular covered call ETFs, but I really like HMAX because it's very, very high yield. It's a little bit more aggressive with the covered calls, and you could get over 14% yield with HMAX. It's also a very, very popular fund that's growing very, very big. And it's about 75% in the banks, but it also has a little bit of life insurance. But really, the main focus, I would say, if you really want some bang for your buck, it's the US banks specifically. So I personally invested in call. I put $5,000 in call. Don't forget that HDIF is pretty heavy on the US banks as well. But if you want pure US banks exposure, income exposure, call and ZWK would be my top picks here. We're looking at very, very high yields for a non-leveraged fund. Call is the highest yielding one at over 14% yield right now. Even ZWK, a more conservative BMO one, over 11% yield. When it comes to energy, this is a sector that I'm keeping my eye on because oil has gone down, which puts pressure on energy companies. I really like ENCC, the Horizons one. They recently rebranded it, and now it has a top 10 Canadian oil and gas companies, including pipelines, including Enbridge, Suncor, things like that, Pembina, TRP. So also over 14% yield. So I would say on the Canadian market, what I think is undervalued is going to be US banks, even Canadian banks, and real estate as well, right? You could always get MREL or RS to capitalize, but also energy is looking mighty interesting. So that's it on the Canadian side. Let's check out what's going on the American side. All right, on the US side, we'll check the global X ones first, QYLD or RYLD and XYLD. So QYLD, nothing much to report here in terms of the distribution. It's pretty much the same. It's really XYLD that has had a noticeably smaller distribution in the month of May here, and I do expect maybe even smaller for June. Why is that? Well, again, it's because of the VIX, everyone. So don't forget that these are covered call. This is covered call income. The lower the VIX is, the lower the volatility is, and the lower the premium is. And you could actually see that right here in their monthly report. So if you go on XYLD or QYLD or RYLD and you just click on Global X monthly covered call report, you could actually see here, this is QYLD. You see a big decrease in the volatility, which means the premium is going to be much lower. So they only give out 1%. So maximum. So this is 2.4. As long as this is over 2%, we will typically always get 1% here. This is RYLD. You'll see the same thing. So unfortunately, XYLD is under 2%. So you see they've only given out 0.93. This is for April. I expect the May one to be lower, and if the VIX keeps going down. So unfortunately, it could mean, although they are, slowly recovering, the stock price is going up, the distributions are going to be lower. If the volatility is lower, it's only normal. And the same kind of thing for JEPI and JEPQ, which I'm happy I filmed it today because they just released their new one. You see here, 42 cents. Now it's 36.5 cents. So another drop in distribution because, again, volatility has gone down. Same thing for JEPQ. 48 cents. You see a big drop here to 35.6 cents. So hopefully, this obviously is going to put some pressure on the distribution of HYLD. They have recently reduced it, and in case you didn't watch it, watch that video where I talk about, we talk about HYLD and the distributions with Rob Wessel, but HYLD did, they did keep a 1% cushion, but hopefully they'll be able to maintain that 12 cents a month dividend, but you got to expect that it might get reduced again if volatility continues to go down. Don't forget, volatility is our friend as an income investor. Anyway, enough of that. So that's it for these ones, what I consider, foundational income-oriented funds on the U.S. stock market. Very simply, why, right? They're just indexes. SVOL, continue with the ETFs. SVOL has been an all-star. no change whatsoever in terms of distribution, still 32 cents a month. It is growing rapidly. So SVOL is definitely becoming one of my personal favorite income-oriented funds or ETFs on the US stock market. You have to consider this as an alternatives one though. All they do is short the VIX basically, which is a good decision now. When you're shorting the VIX, you think something is going to go down, and the VIX has been going down, and that's how they make their big premium. So SVOL, definitely a great alternative style ETF to have. Then we'll take a look at the iShares one, which is pretty much the only way I kind of like to have fixed income. So this is just boring fixed income with covered calls. So TLTW, government bonds, LQD is a high quality grade, corporate bonds, and HYGW, the one I have, is just regular high yield corporate bonds. So the distributions have, let's see, on the TLT, the latest one which just came out, it's a bit lower, a lot lower actually than last month. LQDW, let's see here, a little bit lower as well, but this one is the one that went up a little bit from 40 cents to 45 cents. So I expect that, HYGW will probably always have the highest distributions because it's the most volatile ETF that they're writing covered calls on. But it's funny that it's the least popular. The other two are more popular, but that's, I like HYGW, so I'm sticking with that. Also, don't forget there are these crazy high yield yield max ETFs here. I'm looking at OARC, but right now there's 4 of them. There's OARC, which writes covered calls on Cathie Wood's flagship ARC ETF, Tesla one, and this is an ETF one. The rest are single stocks one. So you have Tesla, Apple, and Nvidia. Of course, Nvidia made a big splash recently, went up, skyrocketed 25%. So don't forget that what these guys do is they hold the stock synthetically by having options on it, and then they're writing covered calls. So this is a covered call strategy, very aggressive covered call strategy. Make sure to check out my video where I explore these in detail and I talk to the options fund manager. But these are very interesting to have as secondary positions, in my opinion. Same thing for Clip. Clip is another one that does covered calls on a China internet ETF from Crane Shares. And some good news for this one, I just recently interviewed the fund manager at Crane Shares. We talk all about this super high yield ETF, so stay tuned for that video. Very interesting. So these are great secondary ETF positions to consider, in my opinion. I wouldn't make any one of these primary positions. The primary positions should be more the indexes here with covered calls, the iShares ones if you want fixed income, and even SVOL. It's been phenomenal. Now, when it comes to the closed-end fund market, of course, we know the US, excuse me, has a big closed-end fund market. Remember, closed-end funds are typically highly leveraged, mostly geared on fixed income, which has been getting killed lately. They also have high fees typically. So the closed-end fund market, in my opinion, tech is doing really well. The indexes are doing really well on the US side. The closed-end fund market is where there's some opportunity. So there's 4 ways. I have a new way now. Of course, people have been messaging me about this ETF. I checked out this ETF and I think it's really, really good. So you have YYY, a basic ETF option that holds 45 closed-end funds. No changes here. They declared another 12-cent distribution. The yield on this is about just under 13% yield. But there's also this one from Saba. The stock symbol is CEFS, so closed-end fund S. And this one has a little bit less yield. The yield is at about between 9 to 10, but the performance is actually really, really, really good. So if I always like to, instead of picking and choosing your own closed-end funds, have an all-in-one solution where you kind of have the whole closed-end fund market. So this is another option if you're in the market. If you like closed-end funds, maybe you don't like them, that's fine. But YYY is a good ETF all-in-one. But now CEFS is another one you should consider. And CEFS, by the way, is also an ETF that holds about 30 or 40 or something like that funds. Of course, you have RIV. RIV is not an ETF. It's a closed-end fund that holds other closed-end funds. I think it's a great pickup right now because it is trading at a 8% discount. So RIV invests in discounted closed-end funds, but RIV itself is trading at a discount. So it's a very interesting proposition. Again, closed-end funds are really what are getting killed on the US market. Then, of course, if you want the most risky one, that would be CEFD, which has an index of over 100 closed-end funds, but it is very highly leveraged. So expect a lot of volatility. So when it comes to the, what's down or sectors, again, it's really financials, real estate. So real estate, the one that shines, or the one that I really like, is RA. So that's the Brookfield Real Assets Income Fund. The yield is like over 14% now. You see here that the NAV is about $15. The stock price is $16.40. So it's not trading at a really, really big premium at all. I think it's under 10%. So I think RA, if you're in the market for real estate, RA is a good option. It is a closed-end fund. It is leveraged, and it does have other stuff besides real estate. It has a lot of REITs in here, but it also has infrastructure and natural resource as well. Anything to do with real assets, basically. If you want a pure real estate one, you could check out JRS. That's a closed-end fund from Nuveen, but that's another one I've seen. But RA, definitely a good pickup. And when it comes to the financials, again, this is really the only income-oriented or covered call financials ETF I found on the US stock market. If you guys know of any other ones, let me know. But this is actually a half-half. That's why you have the G. It's not a D. So the only rate covered calls on 50% of the portfolio, but it's basically an index of all the financials in the US. And if, by the way, if you want a growth option, it would probably be the XLF ETF, which is more than half of FYLG. So if we just look at the stock chart, you see here in the last 6 months, it is down, about 10%. So it is, I would say, undervalued. There's going to be a lot of US banks here. And when it comes to RA, you'll see that also, in the last 6 months, down 6%. Year to date is up. 1 year down 15%. So I would say it's definitely at the bottom. You see here before COVID, it was at 22. Then it recovered back to 22 in 2021 when there was a big bubble. And now it's back down to 1668. Is it up today? Yeah, it is up today. So that's really what I see is undervalued on the US market. And that's pretty much it. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.